Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table.
Welcome to Money on Tap. My name is Seth Cressman, joined here once again with Ben Brayshaw and Dan Mickelin. You guys can reach us at 855-226-8551 or info@yourmoneyontap.com. It is good to have you aboard today. How are you guys doing?
I'm doing great, Seth. I'm psyched for today's show. I feel like we're going to answer a lot of questions for a lot of people that have been struggling for years in probably one of the biggest decisions their life is ever going to involve, separate from their spouse or their loved ones. And that's their advisor. I think today is going to talk to a lot of baby boomers about, finding the right advisor and how to do that well so they can have a successful retirement. And this is probably one of the biggest struggles people have on a daily basis. And there's statistics out there just astronomical about the number of people that need this show today. And I'm pumped. What about you, Dan?
I agree. I think it's part of our day-to-day routine, and it's such an important thing when we interact with so many people. Just finding that right fit and meeting everybody's expectations, across the table is just a critical part of what we do. And it feels good when you got it right. It's just a good fit and a good relationship. That's one of the most rewarding parts of what we do. So, yeah, this is an important show, and hopefully something that's going to guide people into a better place.
I felt that way when I partnered with both of you guys. Just want to let you know. Just a little heartfelt, warm love out to both of you two today.
Oh, beautiful.
Appreciate
thought. Very
you.
Nice.
Want to appreciate you in public. You guys are great guys. Thank you.
Wow, you really are pumped about this show, throwing it out there like that right from the gate. Oh, Ben.
I only said that to you, Seth, because I said it to Dan. I need to include you too. So,
yeah, I love you too, man. I love you too. Since we're going to go there right out of the gate, I'm not afraid of those words. So hey, we love you, our listeners. And if you're new to Money on Tap, well, hey, here's the deal. We're all financial planners. That's Ben, Dan, and myself. We're at Brayshaw Financial Group. You can look us up. You can find us. You can reach out to us at 855-226-8551. If you're on the radio right now, listening to us, you can subscribe to our podcast or not. It's just one of those things that we like to ask people to do and how people can help us out. All those subscriptions we appreciate. And if you leave us a review as well, we would love to hear from you. Just send us a little note at info@yourmoneyontap.com. And what we can do then is send you out some Money on Tap gear, which we've got a bunch of stuff that's been coming in lately that's really cool. It's been fun to just interact with you guys that way. Yeah, we're going to have some fun actually getting into some topics that are not your average conversation that you're going to have. The creation of Money on Tap was this real need. It came out of a need where we just realized people need to hear truth about their circumstances and what's going to help them be successful in their investing, but not all at one time. Yeah, that's a hard fact. You're going to sit down in an office somewhere with the planner, and you're just going to get a load of stuff dumped on your plate, and it's going to be like, oh, I knew I never wanted to come here in the first place. So now I know why. But yeah, we're gonna handle a topic that is one that everyone out there, you're not alone, is talking about or thinking about in some way. And guess what? We're going to give you some parts of this conversation that are just going to help you to move the needle a little bit. Some of you are right there today just wondering, like, well, what do I do? How do I do it? Let's go. And some of you are like, you know what? That was in the back of my head. They're kind of creeping along. And now we're going to just, get it off the back burner and move it forward. Either way, welcome. We're so glad you're here. With that, let's get this show on the road. It's time for Money in the News.
And first up from the big idea, grief tech startups want to help you text from beyond the grave. Now, we've spent a lot of time in the last year or so talking about AI on the show, and this was probably a really unexpected usage, certainly for myself in reading this. But the applications seem to never end, right? There's always something out there popping up in the AI realm. But this is interesting here, where there's a handful of companies, Replicas, one, Hereafter AI, Storyfile, and a handful more, where people who are either I suppose, terminal or ill or feel as if they're on the way out for one reason or another, or just want to be, ultra prepared or taking that step beyond simple estate planning that we love to do with people. But they are going through a process to leave behind a digital entity of themselves in some form or fashion. And there's a couple different companies that go about building this entity to represent you from beyond a couple of different ways. But, very interesting topic where, they'll actually interview you, go through a process of Q&A, ask for stories, collect files, pictures, images, things like that, and create this persona that your loved ones can maintain in contact with after your demise.
Can I say this is really eerie?
What do we say next? Well, yeah, we kind of sat with this one a little bit, and it kind of puts you on your heels when you think about it. It's like, wow, we're at that point with AI where we're generating personas from beyond the grave, and some of the things are ethical around this that are in the debate, where deep fakes from the departed with regulations of post-mortem public rights and all these things kind of coming together to really have a conversation. There's nothing out there that's been done quite like this. It's really interesting. I could see where this is something that could help a lot of people go through a process, but we don't know, because there's the possibility of people building dependencies, and nobody's ever really, unless you're actually like communicating with spirits from beyond or something like that, which I don't necessarily believe in. Nobody's doing this. Nobody's done this. So we don't have any way to be able to tell what the outcome looks like.
I'd be scared to death someone would do an AI of my parents. Something where, be like my mom telling me to pick up my clothes, or I don't know, something there's
I already have that. I don't need any tech. It's like, it's already well ingrained. We've got...
You're still hearing the voices, Seth? Are you hearing voices?
Yes,
Is that what you're saying?
all the time.
So, this is, AI has just got an expanse that's probably just overwhelming, but I'm sure there's a lot of people emotionally that will utilize this and find it to be a benefit. I think there's something about grief that's healthy. I mean, it's horrible as it is to say, as difficult as it is to talk about and to experience, and I've lost a lot of loved ones. To have that lingering around and not be a true self is going to, I think it's still going to leave a different type of emptiness. And I think, honestly, it could become addictive. It could become, I just see a lot of soul issues inside of completeness and not allowing. There's something about when you lose somebody and the permanency of that and the healing of your heart and soul that happened that this would delay. And I'm not even sure that something like this would be to any benefit really spiritually in a perspective that way. But I understand what people are looking at here.
So as you're saying that, I just had the thought, we haven't had the technology, we haven't had videos until recently. We haven't really had pictures until recently. So we've had thousands of years of grief happening in this pretty standard, typical way. Somebody passes away and we commemorate, or we remember them through our memories, through our stories, or whatever that method was until recently. Now we've got pictures, we've got video. Is it any different or is it just another extension of these other ways to really remember our loved ones and be able to hold on to those people?
I just think it's another detachment from reality, honestly. And I think, Ben, you brought up a good point, or Seth maybe. It's just untested. We just don't even know where this goes. Like everything else in the AI space, it's, there's the machine learning and how it can help manufacturing. And then there's the really creepy side of it. And for me, this has kind of fallen into that. But, I think in limited use, I'm laughing at myself thinking, well, it'd be nice to make an appearance at my own funeral. But after that, pull the plug. That's the last AI image of me. Done. I guess the plug's already been pulled, but pull it again. But one time. Next up, Subway announced in late August that it reached an agreement to sell the family-owned chain to a private equity firm called Roark Capital for a deal worth reportedly more than $9 billion. But the FTC has been spurned by Elizabeth Warren to check into this as a potential monopoly, and she expressed the concerns of just continued rising food costs for the American consumer, and is really taking aim at the kind of the sandwich industry, as Roark Capital owns a couple of similar companies. And the question around this is, of course, is it a monopoly? And what I found interesting was the process the FTC goes through for mergers of this size. Come to find out, anything over $111 million will go to a 30-day minimum kind of exploratory period where the FTC will take a look at the deal to try and determine if it's a violation of antitrust law. And this is one of the things that Warren has become, pretty well known for in the Senate, is raising these issues. I don't know. It seems to me as though there's plenty of space in the sandwich market, and this is one of those deals that I fear. But I suppose it's interesting to take a look into the process as to how those determinations are made about what's a monopoly and what isn't.
Well, I'm just kind of like thinking about Elizabeth Warren, and it makes me want to gag. She seems to be, in a lot of positions that I could care less about. I think the sandwich story or the bread story, there's a zillion places making sandwiches. Who cares? Who cares how big these companies get on some of this stuff? I think there's a place where the FTC needs to really step in and figure out monopolies. And, some of those things should have done long time ago before Subway. And that should have been, BlackRock and Vanguard's ownership of, NBC and all of the, media stations. Like, that shouldn't even be allowed at that level. There's a million other monopoly conversations we can have, and Subway is not the focus. And that's the way I look at this. This is a bunch of garbage.
Yeah, I gotta say the hypocrisy here is outstanding. I love this. Okay, so Elizabeth Warren, right? Let's just say that what does she want to do? She wants to control the pricing. Now, if there was an ability for Elizabeth Warren to just go ahead and blanket target pricing and keep that pricing in line through the government, she would do it, right? But instead, she's actually advocating for competition. To do it, natural competition to happen and occur, which is not what she even stands for. It's like she's like taking a step out of somebody else's playbook and trying to apply it to get her way in this thing, which I think is a good thing. Which is let's benefit people and have free trade and have that now. So if they were to try to peg the price of bread through the multiple companies that Rourke owns, which includes the Schlotzskys and Arby's and Jimmy John's, then I believe that would be collusion, right? And that would be extraordinary, and frankly, that would be a different story. But I doubt that's even close to what's possible and happening here. And if they already have enough bread for them inside of their ownership to try to do that, I just don't see how this works out the way that she's raising the red flag here and saying let's be aware of possible collusion happening in the sandwich market. Just by that, I'm wondering, like, who's got the burger market cornered? Like, what would happen if, like, I don't know, Burgerville bought Dairy Queen or somebody else out there like that? Would she be out there advocating that's not the way that they should go to?
The focus is in the wrong places. Like Elizabeth Warren, you're a decade late on 5 other issues. So, moveon.org. Next up, we've got Bill Gates is pulling in nearly $500 million in annual dividend income. Here are the 5 stocks generating the most cash flow from his portfolio. This comes from us, Yahoo Finance, Kevin Vandenbos. This is a really interesting article, guys. Out of the $500 million of income, over $400 million of it is literally created by 5 stocks. It's pretty impressive. This is all disclosed by the Bill Gates Trust. So this is some sort of trust income that he's got coming in, and they were breaking this down. But the 5 stocks were Canadian National Railway, Microsoft, Waste Management, Caterpillar, and Deere & Company. 5 stocks that we do not own in any of our portfolios that we manage directly as we speak. So maybe Bill Gates is doing something better than us. Maybe that's the case. But what's interesting is, as I was breaking down and reading through it, obviously Microsoft would be a key player here for Bill Gates. But when I was actually breaking down some of the stocks, he's owned a lot of these for a really long time. And what we've found, and this is honestly something that we've seen in a number of articles we've done, because we've done stuff on Warren Buffett and some of the holdings he has, like American Express, and how much income he's getting for having held the stock so long. Some people just don't want to sell the stock because they don't want to bring in that gain. They'd rather just collect the dividend income, and the current income being derived meets the needs. And when it comes to trusts, his time horizon might be 200 years and 5 generations down the road. We don't know the reason and necessity of any particular one of these companies. I don't have a problem with any of them. I don't think that's where I want to put my money today. But one of the things, guys, that we had spoken about, and I want to bring this kind of to the forefront, is that just because someone's holding a stock doesn't mean it's a buy. Like when you own something, it may be that it's a hold for you because you own it at some previous date. Right now is not the right time to sell it, but it doesn't mean it's the right time for someone else to buy it. And I think that's kind of where we all landed on a lot of these current stocks as they sit today and the overall market and where you could place your money. And I think that's kind of surmises as much as I got out of it. What did you think, Dan?
Well, I mean, certainly Bill Gates is in a different stratosphere, net asset wise than, I'm sure anybody listening to the show, certainly, well beyond.
Not us.
Yeah, I couldn't even imagine it. So his needs financially and his ability to suffer through up and down markets or up and down valuations of these particular 5 stocks, really are at a level and a place that your average investor might not have the tolerance for. So his ability to sit and be patient, like you spoke to, and just collect that dividend is unique in a really ultra high net world. But I think kind of the investable advice out of this thing is, if you have a stock that's doing what it needs to do for you, and in this case, spinning off a dividend that produces income you can live on, try and find a way to fight through those storms and continue to hold that asset. Don't get all caught up in whether some analyst has it as a buy or a sell or a hold, as you mentioned, Ben. Just look at that dividend declared rate and see if it's continues to be on the pace you need it to be, because that investment could be suited for you, even though some analyst feels differently.
I got to say, is this stuff that he's holding really primarily because of dividend? I mean, because, let's face it, he doesn't need the income, right? It's not important. That's not the story. I think that's overarching all of these things. I think it's the one that Kevin pulls out, which is that, these holdings have dividends in them. But if you take a look at what he's holding, I think that's more to the point of what he sees happening big picture. These are big picture people. They've got a worldview that you and I just probably are never going to get a glimpse into, just based off of the circles that they run in and what they know is going on behind the scenes here. I got to tell you, when you see Caterpillar, Deere, well, understanding where does Bill Gates go? Well, he owns a lot of farmland. He is buying and snapping up farmland like you just we don't even know. It's in Caterpillar and, waste management. These are areas where you have a growth. Like, for instance, one of the stories with the waste management is that, he has an understanding of growing population needs. Well, guess what they're going to need? They're going to need a solid company that knows how to deal in waste management. That's a macroeconomic buy. Do I say buy? No. And like you said, it's, where they're holding these inside of their portfolios at what levels. That's a different story. But I see, I don't necessarily even see the dividend as a part of it. It's just an interesting part of the story, but I don't think it's the focus of why they would even buy these.
Well, I think it would be kind of, I mean, he's still got things he wants. I mean, he's still flying in his jets and has, who knows why this money is existing and income's existing, but he is creating $500 million of annual income. If he wanted to defer the income, he could look for other stocks in similar spaces that would either be lower yield or no yield at all. So, I mean, there's probably some relevance. It's a trust. Maybe it's distributing to something or somebody or himself or covering one of his islands or whatever he's got. Maybe it's what's buying all his farmland. Who knows? To buy all the...
Call us, Bill. Let us know. Tell us what you're doing now.
Yeah. I don't think Bill Gates is invited to our show. So...
You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And today, we cannot wait when we come back to get into dynamic partnerships, finding the right advisor. That's what we're talking about here on Money on Tap today. Some great information for you to get teed up on, and can't wait to get into it with you. Don't go anywhere. Oh, wow. We're taking a break. Go ahead. Yeah.
If Bill Gates calls, he can't come on the show. I guarantee I wouldn't let him on the show ever.
Okay. All right,
So,
Bill.
there you go.
I'm sorry. Ben said no. And that's that. I'm just going to say that. There you go. But in the meantime, people, if you do know Bill Gates, just feel free to let him know Ben said no to the show, and that, but he can still subscribe to Money on Tap. And, go ahead and hit the subscribe button. And Bill, you can give us 1 star for all I care. That's fine. And leave us some hate mail in there. We'll still send you some Money on Tap gear wherever you choose. And we're grateful for you guys doing that for us as well. We love you guys as we started the show with a ton of love in the room. I feel like we've gotten out of the love mode here at Money on Tap and into some other one. But we're going to come back with more love and Money on Tap. Don't go anywhere. We'll be right back. Hey, this is Seth Cressman with Brayshaw Financial Group. Are you looking for a hassle-free way to invest? Look no further than Brayshaw Financial Group. With Brayshaw Financial Group, you can start investing with as little as $100 and enjoy a user-friendly platform with diverse ranges of investment options. Visit Brayshaw Financial Group and start your investment journey today. Brayshaw Financial Group, investing made easy.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more Money on Tap with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are talking about dynamic partnerships and finding the right advisor today. And with that, we did have a little bit of news, some kind of sad news. We have lost this last week one of our heroes in this world of investing, and more than just a world of investing. Charlie Munger, partner to Warren Buffett and Berkshire Hathaway, one of the originators, just a tremendous wealth of knowledge in investing and as well life, has passed away. And he had a very, very full life, and we are grateful for the lessons that he has passed on. And as a student of investing and investors and great investors, that's what we do at Money on Tap and Brayshaw Financial Group. We just wanted to honor Charlie and his legacy as well in this show. And, to do that, get us started, I wanted to read a page out of The Tao of Charlie Munger by David Clark. And this is one of our favorite books that we've held on to here. It just is it's one of these, kind of a coffee table readings where you can pick it up and there's a quote from Charlie, and then it gives a bit of an explanation around, some circumstances around the lessons that have been learned through his life. And there's just so much depth and weight to what Charlie has brought us. So with that, it's going to segue us into our topic today. And this is a topic of making mistakes. There is no way that you can live an adequate life without many mistakes. In fact, one trick in life is to get so that you can handle mistakes. Failure to handle psychological denial is a common way for people to go broke. It's comforting to hear that it's okay to make a mistake. Charlie is a better investor today because he rode a bull market way too long and got slaughtered in the crash of 1973 and 74. He is also a better investor because of the problems Berkshire faced after it purchased Dexter Shoe. And let's not forget the nightmare of Charlie had with Salomon Brothers, which almost cost Berkshire its entire $700 million investment in the company. Then there were problems with Baltimore department store Hochschild Kohn and, as said, U.S. Airlines. Those were huge mistakes in business judgment, often costing millions of dollars. But they set the stage for a greatly improved investment strategy that later paid off in billions. So one of the things that we're talking about, and thank you very much, Charlie, you're going to be missed, and we appreciate your legacy and your life. And one of the things that we're talking about here in dynamic partnerships, finding the right advisor, is what we're talking about. Is doing some due diligence, and we're going to walk through some of what this means and what this looks like in finding the right kind of advisor relationship for you. But there's also the majority of our clientele and the people that we're working with today that were previously working with advisors. And one of the things that can be so hard early on in just kind of uncoupling some of ourselves from relationships that we have, or even kind of reestablishing a relationship, is just admitting some of the mistakes that we've made. And some of those mistakes are our perception, our expectations, our misunderstanding. how do we realign? How do we work together? What have we done well? What have we not? And with that, it's going to be really, like Ben said in the beginning of this show, an exciting show and really one that we have a lot of passion around because we love the art of financial planning and we love what we do here with you. And so giving us an opportunity to create a dynamic partnership with you is one that we honor at our core.
Yeah, Seth, I mean, that's really well said. And there's not much I can add without jumping in to show content per se. But yeah, I mean, there's like over 80% of people are considering a change in a financial advisor. They always are wondering. There's always that question mark. And if you're listening to this show, I'm sure you're one of them. Just wondering, hey, do I have the right situation? Is this all working for me? And, when we're talking about show names, we were coming up with all sorts of stuff, right? And sometimes the relationship, and we talk about the relationship with your financial advisor and who you work with, your planner, it's all relationship driven because if you don't trust them, and there's not that kind of lock and key fit, a feeling of comfort and knowing that just the communication is there, honestly, there's very little that seems to ever go right in those kind of poorly arranged pieces. And so there's kind of two questions I would throw out there before we jump into like real material, Seth. Dan, like the one thing that's kind of rocking my mind is that there's clients that might not have the right expectations of what their financial planner or professional that they're working with is even capable of doing. And I think that, sometimes we put expectations on people and things that don't actually match up with what they're capable of or what the relationship should look like. And I think there's a lot inside of this where some people might be creating their own failures while the financial professional might be the failure itself and not knowing the difference. And I'm hoping from this show that people will have all the tools to make the right litmus test to say, hey, am I in the right place? Should I be moving or am I in a really good, safe spot? Do I have the things that matter and that I need?
Yeah, I think one of the real keys to making this dynamic partnership work is being able to clearly communicate those expectations. And to your point, Ben, hear back from the advisor you're working with if they believe they're capable of meeting that expectation, right? Otherwise, both ends of this arrangement are moving towards an unclear target or perhaps a moving target. And I think when we titled the show Dynamic Partnership, it's important to kind of hone in on that dynamic word because these relationships, if they work well, are going to be potentially several decades long. Dynamic means change, right? So it's possible that expectations and goals and roles in this two-way street relationship change over time. And the best way to address that is to make sure that, those expectations, those goals, those desires are properly communicated. And that can come through in a lot of different formats and settings. And there's lots of reasons that change may occur, divorce, death, children on the way, college funding on the horizon, purchase of a new home, all of these life events that are happening within each of our households, but not necessarily being communicated to that support team that exists to help you meet that goal or achieve that objective is one of the things that can create an issue in that dynamic partnership. When you anticipate these changes, or if they can't be anticipated, they just happen, it's really important that we just communicate that as quickly as we can.
So jumping in here, number one, as an advisor, as a planner, what is my client not telling me? I think this is one of the big pieces. I got to tell you, I've had so many different experiences, people just not laying out all the details and facts. And they always say there's people you don't lie to, right? You don't lie to your CPA and you don't lie to your attorney. Well, don't lie to your advisor or your planner because if they don't have all the pieces, how do you expect them to give you real advice on the best things to do? You don't have to take it. I mean, doctor, you got chest pains and you don't tell the doctor you have chest pains. You can't blame them for not recommending medication, right? So at some point in time, if you have a heart attack, then maybe you should have taken whatever he suggested or done whatever test you should have done. But if you tell him and you don't want to do the test, that's your choice. And I think this is one of the biggest things. From a real life experience, I could tell you people who they've had large quantities of assets in their safes in their houses, cash, gold, safety deposit boxes where they've had assets that they've gotten burned on, whether it's an estate or a family transfer. there's a lot of things that, when you don't know what they are and there's no disclosure, clients tell me, oh, I've got no cash. And then all of a sudden you're liquidating stock and investments and creating taxable events. And meanwhile, they've got $50,000 to $100,000 of cash in a safe or in a safety deposit box or something. And you're saying to yourself, we created unnecessary taxes that we could have pushed into the following calendar year to even this thing out a little bit if we knew you could grab $5,000. There's just so many little pieces that people can't recommend or give solid advice over and over again. I've had people who have, addictions that have spent down massive amounts of, assets. Now, I get that they're afraid to share those things and so forth, but we're bound by confidentiality. And if I had known that, the situation would have been a lot different. The advice would have been a lot different. I've just seen crash and burns because people just don't share, and that gets scary. I don't know. You guys can take it from there.
Yeah, I want to say that there's kind of a bit of the understanding misunderstanding. A lot of the time, sitting in with a new client, there's a bit of a misconception that maybe we're kind of like the Wizard of Oz. The fire and the whole persona and the act and all of the stuff going on to try to, create some kind of an image of who we are and what we're doing. That's just not real. And, meanwhile, we're behind the scenes pulling levers and doing all sorts of theatrics and stuff like that. Well, for one, hopefully that's just a myth. That's really just not at all an experience that you ever have to go through. We realize that there's just different personalities. There's different communication styles. At the end of it, I would say there's a ton of information out there about who we are. For instance, you can go to FINRA and take a look at all of our disclosures about what businesses we're involved in, how long we've been in the industry, where have we worked, where have we come from. And those are not a lot of personal, frankly, a lot of that information is very personal. Not very many people out there could be completely disclosing all of their activity out there in terms of business and licensing and activities. That's all available for you. And we want people to understand that right out of the gate. So there's a fiduciary relationship that we're entering into, or we're discussing, and having that kind of clarity. So fluidity of information is another part that can kind of be challenging. If you have a question, not withholding a question, because there's no question that's, stupid in our understanding or in what we work through. And some of those are just, they can be the blockages or the stop that is in between, adequate and great relationship. As we go into these relationships, I am looking for, me personally, us as partners in Brayshaw Financial Group, we are looking for great relationships with our clients. And it's one of those things that we do before we ever sit down. We talk about and we pray about, because we want to have absolute 100% understanding and clarity and a great start, as well as a continuation of a relationship where you're understood. Your needs are met. Your expectations are welcome here. And, if there's expectations that are not in line with what we do and not within scope of who we are, we're not going to hide from any of that information, nor should we. We should have full disclosure and a good conversation around those things. But it is it's understandable where there can be fear, there can be unmet needs, unmet expectations, and that can be a very scary situation for people walking through the door.
Yeah, and I think one of the things that people bring in that they don't necessarily share is prior experiences with advisors and advice in general. They may have been burned at some point along the way, and they have that in the back of their mind. If that's an experience you've had, if you sit down with us or your next advising relationship, whoever it may be, I think it's really important to just share that experience so that whoever you're speaking to has that knowledge in the back of their mind saying, hey, this might be a touchy subject, or this might be the type of product that we shouldn't go down the road into. So, all of this kind of sharing of intent, of experience, and making sure that the people you're about to engage in this business relationship are understanding clearly what you want and agree that they're capable of getting it there is just very important. I mean, there's lots of things that can come up in life that, would warrant that kind of conversation. things like a divorce that might be imminent, a job loss, a child on the way, trouble with the IRS, getting your bills paid, issues around business transfer. You're looking to acquire a business, sell a business. When those things pop up on the horizon, it's never too soon to start discussing that with your advisors so that we can properly position your assets for that eventuality should it come. There might be some of these situations that simply require you to de-risk just to put yourself in a nice stable position to get through whatever this time frame is. So that conversation around sharing what's of value, sharing what's important, even before it's actually occurred, is really important part of the dynamic in this kind of relationship.
You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Today, yes, we are talking about dynamic partnerships, finding the right advisor. And we've really been getting into, just kind of clearing the air. Some of the stuff that really doesn't get brought out on paper, conversations in between the conversations. It's kind of the stuff that conversations we've had with ourselves before we even walk into the room with an advisor. And we welcome the opportunity to have conversations with you about financial planning. You can reach us at 855-226-8551 or info@yourmoneyontap.com. When we come back, more about dynamic partnerships and really finding the right advisor.
Hello, everyone. This is Dan Mickle of Brayshaw Financial Group. Are you looking for professional guidance to kickstart your investing journey? Look no further. Brayshaw Financial Advisors are here to help. Our team of experts will provide you personalized advice tailored to your financial goals. Visit us at BrayshawFinancial.com today and schedule your free consultation. Brayshaw Financial, investing made easy.
We appreciate you listening to Money on Tap with Ben, Seth, and Dan. You can contact us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more of this week's program.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are talking about dynamic partnerships here, finding the right advisor at Money on Tap. And we welcome the opportunity to do that with you. And also thank you for subscribing to the podcast. And with that, we are jumping into, what is it? Why do clients leave financial advisors? So lots of reasons, right? There's a lot of the time there's the ones that just, when clients are coming to us that they, like we said, they maybe haven't really fully disclosed what's happened in the past with the financial advisor. Sometimes there's been a financial advisor that's passed away. That happens a lot. And then in those books of businesses, a lot of the time at organizations or companies, they'll wind up kind of pushing clients into the next bucket and without really any communication. And so people really trying to make sure that they're a part of a decision and they're part of the decision-making process in their planning. That can be just a style of advisor that's just not really working for them because they kind of are left behind and maybe they haven't been proactive in that as much as they would like to. That's kind of part of maybe admitting some of our mistakes that we've made. There's also performance. Frankly, there's maybe some lack of performance that's happened, or maybe it's just not the advisors really what they do. There's advisors that work really well in insurance, but maybe they're not so involved in portfolio and growth and asset management. And again, that might just be a kind of just not the right fit. Another one for us is we hear a lot of is communication sometimes where, been working with an advisor, and like one client I can remember was about 3 years since they had heard from their previous advisor. And so there's circumstances and disconnects and, communication being a big part of that a lot of the time that can really kind of set people up for feeling alienated or not really feeling looked after in their relationship. And that's a big part of understanding how this relationship needs to work. And the clarity up front with an advisor, for our understanding, should be a commitment or an understanding. How would you like to be communicated with? Our quarter annual or quarterly reviews, are those important to you? Some people are, maybe it's more like, once or twice a year, I want to hear from you. Those are big differences, and there's different needs inside of those. So having those conversations up front is really good. And before you even sit down with an advisor, it's good to understand. But that's part of the discovery and really trying to understand, how to engage with you in your planning.
Yeah, I think what's important too is understanding what are the must-dos for an advisor. How are your expectations going to be met? You want to enter into these meetings and leave these meetings understanding, first of all, nobody cares more about your money than you do, but you want to have at least that perception that your advisor takes it very seriously, okay, that they are there for you, and that you want to understand clearly what it is in terms of services and expectations that they intend to deliver. It sets point. How often do they meet with their clients? Does that meet your expectation? What are the means of communication? Are we talking face-to-face, Zoom, email? What's comfortable for you, and does that fit the practice that you're engaging on these kind of topics? And do they know more than just about investments? Again, to Seth's point, there's certainly specialists in this business that focus on portfolio management, insurance products, long-term care, derivatives. There's every stripe of advisor out there. You want to make sure that the one you're working with is competent in the field where your needs exist. It's just very, very important that be part of the expectation set in those initial conversations. You might get along with somebody great. They might be referred to you by somebody you trust, but it's just not the right relationship for you. Your needs are different, and it's not about just getting along. It's about delivering the results that you need to have. Then you want to have someone who's willing to teach you about why they're making recommendations, if that suits you, if that interests you. And a lot of people, I think most of us would feel that way. They don't want to feel like they're getting preached to necessarily. They want to be taught as to why this recommendation fits for them, so that you can really get to the intent and the resolve of that advisor you're working with. And you want to find people that are truly proactive and not reactive, right? You want advisors that are going to call you when conditions dictate, that based upon the investments that you hold, they foresee some change coming. You don't want to just get that call because the market's crashed and they're letting you know that your accounts have, really truly bottomed out. So understanding what's comfortable for you in that relationship and being very, very clear with that advisor that they have the capability and sense of meeting those expectations, that's how you get off on the right foot.
There's so much to that, Dan. I really appreciate all of those items that we've brought here to the table. I think the one thing that people do not like us for is, besides the laundry list of other things, saying no, helping people say no. Clients don't like to hear no, or that this is not the best financial move for them, that this is not, how much they should take from their portfolio or do because of a certain concern, or talking to them about certain types of trusts that might reduce liquidity or, but it's all for their best interest. Like, we're trying to accomplish their best interest. But I think the one thing that people do not like hearing is no. And I have found throughout couple of decades of working with people that some people tend to go to the advisor that tells them yes and doesn't help them, because sometimes helping people is really not giving them what they need or what they want, I should say. I mean, what they need is really sometime, guardrails and architecture to finding success. And I was talking to somebody a little while ago, and they were telling me they were working with somebody and they had spent down the majority of their assets trying to retire early because they told the advisor this is what they want to do and this is what they want. And they took more money out than they should have. And now they're kind of looking at a different road of life. And they can't go backwards. But no one actually took the care to say, hey, this isn't what you should do. This isn't right for you. This is going to fail. This is not going to statistically work, or whatever the story was. Or maybe they managed the money poorly. I have no idea. But at the end of the day, no one really gave them the guardrails they needed to find success. And I think when people don't like hearing no, it's that we're really just trying to help them. And some people, they don't do well with this isn't the best for you, or this isn't how you should do it. They just want to figure it out on their own. And a lot of times they don't realize that the training and the knowledge and the experience we have is not for no reason. It's not, people, I don't know about you guys, but I just get frustrated that people really don't want advice sometimes, no matter how apparently wrong it is. And it doesn't matter whether it was us or somebody else, they're just going to go do what they want. And sometimes the other spouse has no idea because they're not financially in tune with a lot of things. And you can just see them going down a rocky road. You guys have any thoughts on that?
Yeah, I think that's, it's part of the business. When we've had a number of clients come in lately talking about, particularly weddings, right? Spending on a wedding. And we just have to sometimes look at the overall finances and just say, hey, listen, this has got to be kind of the threshold of where you're at. And this is probably the conversation you should have. So we end up advising people not only about the facts and figures on the page, but about how to engage a sensitive conversation in their own life, in their own world, just from the perspective of, hey, listen, we're trying to make your money last. We're trying to prevent you from making a mistake that's going to linger and really change the outlook of the next 20 years of your retirement. So saying no is important.
The wedding thing, I forgot about that. We've had a couple of those crazy kind of wedding conversations with people with expectations by their children or other family members that they're going to do something or provide something that they physically cannot afford. I mean, someone was going to retire, liquidate a huge portion of their retirement plan. I was like, you're going to pay taxes. You don't have enough. You're still trying to save for retirement because you don't have enough to retire yet. And yet you're going to come up with this astronomical amount of money. It was just, I don't know what it is about the wedding world, but that has just, I know it's expensive, but it doesn't need to be that. Like, I think you just tell your children, this is what we can afford. There's a no to them too. And I think that's hard to say when it comes to your kids. We all have children. We know how difficult that is, but overspending is, I don't know what the expectation side of this world has forced people to feel like they have an obligation, but it doesn't exist. You do what you can afford. If you can afford a 27-inch TV, you buy a 27-inch TV. If you're fortunate enough to afford a 70 or 80-inch TV, well then, be grateful you can do that. But if you can't afford it, don't buy it.
You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We're talking about dynamic partnerships and finding the right advisor relationship for you. You can reach us again at 855-226-8551 or info@yourmoneyontap.com. We appreciate the likes, the subscribes, and also the little notes that you've left us there on the podcast forums. Those are wonderful. We really love those. They help us out a ton. As well as want to make sure that we're sending out some Money on Tap gear. If you've missed out on that opportunity, send us an email at info@yourmoneyontap.com or just give us a call and we'll be happy to send you out some of that Money on Tap gear. Don't go anywhere. We'll be right back with more dynamic partnerships, finding the right advisor.
Are you ready to take control of your financial future? Look no further than Brayshaw Financial Group. Our team of experienced advisors is dedicated to helping beginners like you build wealth through smart investing strategies. Visit BrayshawFinancial.com today to start your journey toward financial independence. Brayshaw Financial Group, your partner in wealth creation.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more Money on Tap with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We've been talking about dynamic partnerships, finding the right advisor. And this is a tricky wicket because guess what? We're all financial planners. And we have people coming to us that, are just, for whatever reason, they're needing to move. Sometimes, speaking of move, we have clients that just move states, locations, and for their specific needs, they need to be able to sit in that advisor's office with them because Zoom just isn't going to work. We get that. That's one of those other reasons. And it doesn't happen all that often, but especially in today's day and age where we're able to do so much with Zoom. We have clients all across the U.S. and referrals come in from friends and family from all over. So with that, we want to get down to some of the I think some of the questions that you need to be prepared to ask yourself, like, are you there? What's one of those tests? What's the acid test for you? One of those, I think, is circling back on the conversation with Ben and Dan. What is the one thing that you're just not willing to tell your advisor? And if it's, and will that stand in between you and being successful in your retirement? If so, what do you need to do to have that conversation? If it's not with the advisor you're with, than with somebody else, right? Because sometimes those advisors, can be friends, family, people that you really know, like, respect. And some of those things that you're not ready to share, we get it. You might feel judged. You might feel uncomfortable. Those are, doctor kind of relationships that you're having and needing to have those conversations. I would say that's where you need to pick up the phone. You need to have somebody that's a third party that you feel comfortable with and safe with to be able to at least have the conversation. It may not keep you from what you need to do. It might just be something that really, the truth is very effective at getting what we need to the table to be able to make the right decisions. And that might be continuing to stay where you're at. It might be a move that needs to happen as well.
That is a great litmus test. Ask yourself the one thing that you're not willing to tell your financial professional. And if you won't tell it to them, how do you know how it's not impacting your finances? So that's a big deal. And I mean, I get it. Like, I have neighbors that know I'm in the business. They ask me questions all the time, but they don't want me to manage their money, or they don't want to talk to me about that stuff. Or some of my closest friends, I manage their money, but other ones, it's like, there's like a little bit of line. And I mean, they don't realize I don't really care. Like, money means nothing to me. It's just like, it's part of life. It's like pulling teeth for a dentist. It's like, whatever the story, this is just what we do. It's our version of practice. But if you can't have absolute trust, that's a problem. And so, I mean, I've had people come in for whether it's a trust issue or their performance was peculiar. I've had one guy, we were chatting about this earlier, guys, he came in expecting, hey, listen, the market does 7, 8, 9%. And I've been looking at my portfolio and, my guy is not performing in the market level. I look at him like, you own all bonds. Like, you're never going to do 7 or 8% unless you own junk and hope for the best. It just wasn't reasonable. So the expectations that people put on financial professionals, whether it's us or others, and I feel bad for some people, yeah, they need to be thrown under the bus. That's just part of it. We don't want to do that. It's not part of our thing. But if you sit down with somebody and they can't give you an honest opinion of what your advisor at least has done good and what they have done poorly or what they can do better, then I wouldn't take that advice anywhere. I mean, if you should be able to litmus test this somehow. You should really be able to figure out that your expectations match up with what reality is. And if you expect to be doing 7 or 8% every year and the stock market just tumbled like 2008, well, I would question whether or not you're working with Bernie Madoff, because there's times where market investments just will never do what the market's not doing. So how do you compare that? And so being realistic about what you're expecting is really, really a big deal. And then making sure that you have someone who can give you that second opinion and really drive home whether your person is doing a good job or just not meeting your needs. That's really what happens.
Yeah, there's many advisors like us that offer a free consultation, right? That first conversation, that first appointment isn't going to come at a cost of anything other than your time in most cases. Certainly with us, I can say that for sure. So if you're feeling even slightly unsettled in your present relationship, or there's some reason that you're concerned that expectations aren't being met or aren't being understood, you're just not getting the right kind of communication frequency, just feel free to give us a call. I mean, to Ben's point, we'd be happy to spend a little time and sit with you and just say, hey, listen, this is the reason your expectations are not met. What you own here isn't designed to get there. Now, that could be a breakdown on his end, the other advisor's end. It could be a breakdown on your end as a client, not carefully explaining where you want to be. But that consultation, that conversation, that kind of third set of eyes, we'd be happy to do it.
And I think, people say, well, who are you guys? How are you the judge? And I would tell you we are, because we're licensed to be that. I mean, Dan and I are both compliance officers. We both review trades. We do both look for suitability and compliance. We understand that and are trained and been doing that for decades. And so to actually look at your portfolio from a professional's opinion and say, hey, listen, based on what you're telling me, this doesn't match up. So did you tell them the same thing? And therefore this doesn't match up because now you've changed? Or did they buy this for you irrelevant of what your needs were? And so being professionally trained and licensed to evaluate these from a professional opinion is totally different than just being able to do business in the industry. And that's what makes us a little different. And I think something that can offer a real different perspective for you to validate one way or another.
You've been listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We've been covering dynamic partnerships and finding the right advisor. hopefully that's where you're at, and your relationship with your advisor is wonderful. And if you have questions or anything's coming up, or you've never worked with a financial planner, again, a consultation with us, 1 hour, is free to you. We'd love an opportunity to find out more about your financial planning needs and try to get down to, what's important for you. And this is important. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Be successful in your investing, people. We can't wait to be here with you next week.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.